Hi, this is Brian Shannon from AlphaTrends.net. Today is Monday, June 14th, 2010. Let's take a look at this S&P 500. We had the market get right up to this 200-day moving average today, and it's been widely watched, and we've been keeping an eye on it. This is the third time it's gotten up there in the last couple weeks, and third time it's so far turned away from it. Doesn't mean it will continue to turn away from there. It's possible that we're building maybe a little bit of a right shoulder underneath that little area of resistance at the 200-day moving average, and that's kind of what I'm outlining here on this 65-minute time frame. You can see that we broke the downtrend line that's been in existence since the May 4th break of the 118.50 level right here. What I was pointing out on the blog this morning too was the volume weighted average price, and that's what I'll look at right here. From May 4th forward, you can see comes in right at that neckline as well what I'm calling a neckline right now. We need to still see maybe a little bit further pullback, stability, perhaps down near about 108.50, and then a push up through that 111.10 area basically is what it is. But we still remain obviously in a downtrend. We've got a declining 50-day moving average. We've had this level of resistance in existence here for a little while, and that's the high end of this range, the 105 to 111 area. So, looking at a 10-minute time frame, you can see the market, it got right up to that level that we were looking for potential resistance. And again, there were three things that made it look like it might be resistance. One is it was this prior support that did become resistance on a couple occasions. It's also where we saw the 200-day moving average and the volume weighted average price again from the break on May 4th. Now, if you take a look at the volume weighted average price since the high, then perhaps if we get above that 111.10 area, then we're going to get up towards about another dollar higher, up towards about 112.15, before we might encounter some resistance based on the volume weighted average price from this high right here that we had seen in late April. So looking at this market, it's still a mess. We've got volume really diminishing here, and that's something that a lot of people are concerned about. I think a lot of it also has to do with the fact with it is summertime, and you look at typically markets, market volumes tail off around this time of year. So we had the same thing last year, and it's still possible that we're creating this scenario which I had mentioned back here, so that this might be similar to what we had seen back in July of 2007. We're not sure yet, but if so, then we're possibly going to create that bigger head and shoulders. That's a whole nother bigger mess to talk about down the road. But for now, what we want to see on Tuesday and for the rest of this week is that some of these support levels hold. For instance, about 109.30, that was basically the highs from Thursday afternoon and Friday morning. So we'll want to see that hold as support. So far, it looks okay. If we break below that level, then the next important level of potential support should be found at about 108.50. That's where we're likely to encounter this rising 5-day moving average as well. Altogether, though, we still have a lot of mixed messages from this market, and I still believe that the majority of the traders should be trading smaller share size if you're involved, and it really favors this environment, that is, really favors day trading right now.